Michael, I'm troubled because I heard Eunice's report just now, and there is no real, at least commentary coming from the Chinese government through official channels with regard to this deal. So is this another scenario where the markets have to tread a little bit more lightly around the possibility of an actual deal happening?
Well, it is concerning that, almost a day after these first reports started to come out, that the Chinese still haven't corroborated any of this. I do still think it's in both sides' interest to get this done, that there's enough common ground that the U.S. would agree not to raise tariffs, not just this weekend, but hopefully through 2020. The Chinese would like, I think, to, in some sense, lock President Trump into that kind of an agreement so that this uncertainty to go through the U.S. election doesn't derail things. The U.S. tariffs on imports from China have been far and away the most important reason why this region has been slowing down over the last year. So if these reports are correct, this is really positive news. Just the absence of tariff increases will reverse the slowdown in growth in this region that we've seen over the last 18 months.
All right, so with that in mind, what exactly does the market need to see for them to really feel as though there is a substantive reason to be more bullish on the global economy and the prospects for possibly at least a move higher in some of those growth rates, given U.S.-China trade negotiations?
Well, at this point, all we need is the Chinese to say, yes, we agree that there's enough common ground, that we will agree to increase agricultural purchases. We'll make commitments on intellectual property rights and a more level playing field for foreign investment into China. And the U.S. on their side will at least not raise tariffs. And the Chinese always wanted some at least token tariff cuts. And it sounds over the last 24 hours that that might be part of the agreement. So we just need the Chinese to say that, yeah, we agree that we're very close to wrapping this up for the next year or so.
Michael, who's been winning the trade war? I say that a little tongue-in-cheek, but there's this notion right now that the U.S. economy is doing much better in terms of holding up versus the Chinese economy, that the trade war has hit the Chinese economy more than the U.S. So is this a scenario where China can now perhaps, if they do agree to this, see some kind of a pickup in their economy, and the same for the U.S. as well?
So I don't think either side has won. China has had to adjust policy in order to accommodate for the fact that exports are shrinking where they used to be growing quite significantly, but it's not a particularly export-sensitive economy. So it's been an adjustment that they've been able to make, I think, reasonably easily. They have not had to give up, for example, on their deleveraging policy, the relatively tight credit policy. You've not seen a big fiscal or monetary stimulus this year, except for maybe a couple of months at the beginning of the year. So it's been, I would argue, bad for both economies. It's been bad for business sentiment in the United States, indeed globally. It's been bad for the U.S. consumer who's paying the tariffs. And it has been bad, particularly for the export sector in China. If tariffs stop going up, that drag on activity in both of these economies will become much less over the next year. And if tariffs can come down, that effect gets magnified. So in both countries, I would say this kind of an agreement, as tentative as it is, if it's corroborated, this provides the foundation for growth in both the U.S. and Chinese economies to improve over the next 6 to 12 months. And it would be, of course, even more important for the smaller open economies in Asia, whose exports to China, feeding into Chinese exports, have been even weaker than Chinese exports. So the rest of Asia desperately needs China and the U.S. to agree to some kind of at least stalemate for the next year.